So let's go over some of the trades today, and let me explain a little bit about our trading system to you. This is the color match trading system. Um, and it's very, very accurate. What makes the system different from other trading systems is that we don't use moving averages to find reversals or trends. We use actually order flow. Now, order flow tells us when the buyers and sellers are in control uh, very accurately or much earlier than a moving average does. Moving averages have a value, but they really don't give you the the understanding of the underlying of the market. Order flow is a much better indicator of what's happening in the market. We use a closed code or a private um, indicator, which is available to you. It's OFA. You can see it over here, OFA. But by itself, even though it's a good indicator and accurate, it's not going to make a trading system because of the nature of what it does. It's not a strategy. It's more of an indicator. Whereas when you couple it with what I did down here, this is a custom oscillator that I built just for the order flow. And now together becomes really, really accurate to find really good trades. Now, when you see it, I'm using the 1 minute NQ. I trade the NQ pretty exclusively. You can trade anything you want. But when you have days like this, see, with trading, you never know what you're going to get. And you have to have a system that can deal with every single type of day. That's just the way it is. You have to have in your arsenal a system so good that no matter what the market's doing, you can confidently trade. And this is the only system I've ever seen that where you can do that. It gives you such accurate readings as to what's happening that it's hard not to win on a daily basis. Now you may lose some trades, but overall you should be winning like every day with this type of with this type of strategy. So this is actually Tuesday, um, June 2nd. Sorry, June 2nd, Tuesday. And this is, you can see, we'll just kind of talk about this a little bit. By the way, in the description, you can join my Whop group, WHOP, for free. You can come in, become a member for free. We'll talk in there. We have chats, we have support. We'll discuss some of the different trades. Sometimes I post these trades in real time so you can see, we can talk. And then if you want to get the strategy, you can do that as well. But you don't have to get the strategy immediately. You can just come into the group and become part of our community. So you can get a better understanding of how to use this particular strategy. So this is right here, the difference between these two colors here. This is the open of the New York session. And you can see there's absolutely no order flow signals here. So we don't bother with anything here. Okay. This on the bottom is our oscillator, but we're waiting for some signals from the order flow because they don't happen on every single turn, right? Sometimes they're too quick. Sometimes they're just not available, so you can't rely upon them on every single turn. Our first move here, and we could have taken this short. There's a first signal at 8:58, actually, and we could have taken the short. Let me back up for a second. Actually, this signal here, there's no signal, but in real time there was. Now, these generally never repaint. What you see is what you get here. However, in the Whop group, I actually took this trade today. There was a signal right here, and I took it, and it worked out really, really well. but since it's not showing here, I'm not going to discuss it. So the first real trade would have been here. And how we enter a trade is, and I think I give an instruction, I give instructions to you in the Whop group on how to trade this strategy. But when you get a signal, a order flow signal, you want, even though it's right here at the very top, which is amazing, okay, where do you find signals like that? You still want to wait for confirmation. You want to wait for a bar to close below the bar with the signal, because that tells you for sure that it's going to be going short direction. It gives you the confidence you need. Once you get that, you look below and you look at our oscillator. If it's red, and you want to go short, you've got a confirmed short, right? If you have a signal but no oscillator on the bottom, I would pass on it, which is what I recommend. Just pass on it and wait for the next signal. So once you enter, there's three ways to exit. One, you could wait for another signal. They don't always occur, but that's one exit. If there was a signal down here, you should exit, right? Or you can wait for the oscillator down here. You wait for an opposite color of the oscillator, which would be green, and you wait for the end of the oscillator, the blue line touching the end, meaning after this period here, down here, the oscillator turns black or neutral. That would have been right there. But there's a third way to exit as well, and that is placing a stop loss right above your entrance. So in this case, the first exit would have been hitting a stop loss right above your entrance. Even though it came down, it came back up. My recommendation, just take a small loss or a break even. You could have been broken. Once it starts moving in your direction, you could take a break even right about over here and get out of the trade, because you'll find most good trades in our system, it will be clear. There'll be no, it will not hit a stop loss above your entrance. So if it comes up there, just take it and get out and wait for the next one. The market is just not moving comfortably in the direction we expect. Okay, no problem. Even though it came down again, don't worry about it. There's so many other signals to be watching. Now, diamonds, here's another entrance of a possible signal. And when you see these number of diamonds like this is not the fault of the order flow. This is telling you, when you see this cascade of diamonds or circles like this simply means that there is a very, very powerful trend taking place in one direction or the other. It's just going through stop losses and just cutting through like crazy. And so we took a trade right here because this is the first diamond bar on this trade and this entrance here, because here is diamond entrance there. Actually, no, this trade did not occur here because there's a diamond here. We're waiting for the first bar after the diamond, and that would be this one. Didn't close above the diamond, so we did not enter here. We wait, and down here, you can see these diamonds. Nothing closed above the diamond. It came very close. Let's see, right here. Okay, so there would have been an entrance possibly right here. So if you entered right there, because there's a diamond, but it's not on this bar, so you probably would have entered right here. You know, if you're really a savvy trader, you might have said, hey, I'm just going to wait for the market to close above here, because you have to have some intuition in the market. You know, no system is totally mechanical. And you could say, well, you know, I'm seeing the market just coming down like crazy. I want to see it come and close above this bar here. If you had waited then you would never really have entered. Let's see. You would have entered on this bar right here, this one right here. But let's say you did enter over here, this bar here, you would have got stopped out on this bar. No problem. If you had come down and waited, you would have got on this bar, and it really wouldn't have been much profit anyhow. So this is not a great trade. The market's telling us nothing happening here worth getting too excited about. Now, here's diamonds again, same situation, which I don't see very often, where you have this cascading number of diamonds, and we're looking for a short. So the first short opportunity where the diamond stops producing on any bar, and then you wait for a regular bar to close below the order flow bar would have been right there. That bar and that bar happens to be good bar down here. Now, if you had placed your stop loss just above, you would have gotten stopped out. Just see how choppy the market is today. Fine. You would have taken a small loss. If you had stayed in, it would have come down here and you would have exited over here for a gain. So you need to see, okay, what's going on. You need to understand very clearly how the market works. But again, if you followed the rules mechanically and you got out over here, very small loss, not a problem. Let's see if there's another trade that we can take. Here is definitely, again, look how this circle forms right at the very top. I mean, where do you find those type of signals? And so the first entrance would have been right here on this bar, because it closed below the signal bar, and we would have gotten out right here, and this diamond formed. So we would have made some money, 36.48 down to 36.32. So we would have made money on this trade. We exited right on the diamond, waited for another trade, and then we got one down here. So you can see the circle formed here, and a second time it formed, didn't form here. The first entrance could have been right there if we're keeping a very tight entrance right here. And I would have taken this. In fact, I did take it because 30,600 is a great number. And this thing is telling me to go long. You can see it's confirmed by the oscillator. It's green. So we got a long signal, confirm, and the bar is closing right here. So I'm in at 30,611.50 instead of 30,612. And I would have stayed in until this bar here. So very little gain. I know it went up much further, but look, this bar came down here, and you have to be cognizant that this is a possible move down that could have taken place. So you as a trader really have to protect yourself. So this would not have been any gain. But what's important is you didn't lose. You gained about 5 or 6 points on here. You got out, waited for the next signal. This one did not confirm with an oscillator in the bottom. This one here did, but it's 12:30. We have 30 minutes left before the market closes. It's okay to take a trade. I would. This market, the trade would have been right above the signal bar here. I look down, see the oscillator is green. I take the trade at 30,672, and we made finally a nice, decent trade. We got almost 25 points on this trade. And you see how we exited right at the end of the opposite color in the oscillator. And the reason we do that is because this is the overbought area. Sometimes it extends for a period. So we make a lot more money when we wait for the oscillator for the line to get to the end of the oscillator. That's where you can see some real movement. Okay. So this wasn't a very profitable day. But we didn't get hurt either. We didn't get hurt. And we made a few dollars, and that's what you want on a choppy day like today. I think we went over this trade. This was yesterday, Monday, and we can go back and see if there's any decent trades on Friday. I think we went over this before. You can see this beautiful trade down here. I'm just looking back at some of the trades. See how, look at the very bottom. This is the actual bottom of the trend. And the order flow bar is such a good order flow signal. And it found it, and so did our oscillator perfectly. So this gives you so much confidence in taking this trade. And we waited for the bar to clear, which would have been right here. I know that's a pretty big bar. That's 30,302 to 30,320. It's about 20 points. Don't be worried. Take that trade and look where we're heading for. Usually the trades will fill a liquidity gap, which was created here. The market moved down very rapidly, moved right back up. Okay, that's the nature of the market. So we're going to ride this back up right over to here. We also could have waited to get out here because this is an absolute exit. If you look at our oscillator in the bottom, this is the red opposing color from green. This is the end bar right here. So we would have exited 30,343 as an absolute exit, entered 30,320. There's 25 points. If you are savvy trader, you could have taken the exit up here because you would have known that the market just recaptured the liquidity from the previous swing low. And if you did that and waited, you could have literally put a limit order to sell over here, just about here, right? Because the market came right back up, which is a smart thing to do. That would have been 30,359, and that would have given you almost 40-point gain. Okay? This is how you have to trade. This is the trading mechanism that we're teaching people. Here's another perfect entrance. Look at this. The order flow indicator found the perfect bottom. That's what this indicator does. It's really, really good, accurate. And then when you couple it with our oscillator, you have an absolutely phenomenal chance of taking a good trade. Here's the entrance, one bar above, closing above. Don't be scared, just take the trade. You can put your stop loss someplace below here, maybe below there, below the signal bar, which would be safe. And look at it move up. It didn't capture all the way up, but we got a diamond. The diamond's saying to us, hey, there's a lot of guys who put sell orders in over here, and this thing is going to move down. So as soon as a diamond forms, and it actually formed at the top of the bar, because that's how that works, that gives us room to take this entire bar in terms of profit. So if we entered here at 30,391, we could literally have gotten out at 30,410. That's a 20-point gain right there. Okay, that's beautiful. Look at that perfect trade. We got in at the bottom and you weren't faked out. How often did you get into a trade, didn't really know where it was going to go, and it comes right back down and takes you out? Well, we made money on this trade while a lot of folks didn't, because look what happened after that. The market comes straight down like a banshee. Boom, 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 straight down. So you would have been one of the few people to get out over here. As soon as that diamond formed, and it formed right at the top over there, you would have exited immediately. Immediately, no waiting. So you would have been a rare bird to get those 20 points, okay? Let's see this over here. Okay. So this one here is also possibly legitimate trade, because even though the diamond forms right before the green, the entrance, you can start to see it's still chopping here. This isn't even an entrance bar. It's a very slim, this is an oversold bar. So you could have said, okay, I'm not sure about this trade, and you could have passed on it. But if you look closely, actually, I apologize. The entrance would have been up here. And if you said, this looks like a little too far for me from this area down here, you could have passed, that's fine. But if you learn our system, this could have become an entrance. You're saying to yourself, I'm going to try to recapture all this liquidity. Let me buy this entrance right here. It's confirmed, I'm in. I'm in at 30,390, which by the way is almost the same price over here. See how the market revisits itself so often? Who do you think's buying? We bought right here at the same price. Institutions bought and pushed the market up. You see that? So 30,000, of course, you didn't know that over here, but you sure knew it over here. Yeah, you should say to yourself, this is a darn good place to buy. So we bought over here 30,390, and we waited for an exit, which according to our oscillator would have been way up here, way up here. That would have given us a beautiful trade. Or if you wanted to get out early right there, you would have said, you know what? That's pretty good right there. Probably recaptured a lot of the equity, a lot of the liquidity. That's fine too. So either one would have been a great trade for you. Okay. And that pretty much covers that day. Those are 3 good trades right there on a Friday, which is typically a tough day. You know, this is the opening of the market, and we really didn't get any order flow signals until I showed you the first one. Now you could trade this overnight, you can trade this in get up there. You can trade this overnight, but I don't recommend it so much. You can, as long as you don't start seeing a lot of cascading signals on the order flow. It means there's enough liquidity happening in the overnight. So if you want to trade the Asia session, the London session, as long as you're seeing one, maybe two of these diamonds or circles forming, that's a good sign. You can take those trades if you want. This was Thursday. You look at the choppiness of the trend. Just look at that. I don't think there'll be any good traders who could trade anything like this, but you can. This is tradable for us. But unless you have a system that gives you this type of accuracy, I don't think you could possibly trade this any other way. You could definitely not trade this if you were using moving averages, because you'd never find the tops and bottoms. So here is 6:31, 1 minute into the open, and the market gave us a really good signal. So I'm not afraid to take this trade. Okay, I took this trade. You can take it. And there's your first entrance, 30,063. Look how the market came tumbling down, all the way down to here. Hey, we caught an opposing signal. At the same time, the oscillator confirmed that this is the exit bar. So there's a lot of liquidity at the open. A lot of trades are going off. You get the London session, the New York session. We caught an absolute winner here, 30,066 down to 29,953. This is over 100 points. So I want you to see that. First minute into the open, 1 minute, you caught a 100-point move, 100 and some odd point move, okay? In 1 minute, and you're done for the day. If you want to just go out and call it a day, 100-point move, are you kidding me? You'd be the envy of any day trader right there, okay? So not a trade here. Here's a possible short. Be careful here. You got a short signal. We enter here. The oscillator confirms, come down, came right back up, even up higher, and took us out. So we got stopped out on this trade. Another trade here, stayed in here, got stopped out. Hey, this is a market moving up against us, but we're getting in at the proper time. So if we're getting stopped out, we're not losing much. Okay, we're not losing much. And sometimes there's nothing you can do when you have these signals and it keeps moving up against you. There's nothing you can do. We're taking small trades here. And that's why when I see the market like this and I'm losing, or I'm the short trades are not working, I really prefer to take long trades. Okay, I really am looking for long trades. This was a short trade. It did work out. This, again, the signal is at the very, very top, which is amazing. So we took this entrance. It was confirmed by the oscillator. We came down beautifully right here, and we exited right here. This is the kind of trade you want to see. Of course, it would be nice if it was a bigger move, but just see the accuracy. We're in here, we exit here. We're in on the turn of this move, and we exit on the turn of the move. That's like a J or an S. It's a perfect trade. You entered the best possible spot. You exited the best possible spot. You're done with the trade. Let's see this one over here. Look at that. Not confirmed. We don't take it. Not confirmed. This one up here is confirmed. Now watch this trade. This is the short. We're saying to ourselves, hey, you know what? Maybe the shorts are starting to work out. I got a short here. I took it. Really nice. Made some money. Another short here. Okay. And it's right here. The short occurred at the resistance level over here. You got to know this as a trader. It's good to understand the market. Waited for the first bar to form below the signal bar, which would have been right here. We took the trade, 30,305, and we're looking to come down here, right? Because we want to recapture this liquidity. That's how the market works. And we talk about that in our Whop group. Welcome to come in for free and discuss this. If you're new to trading or you want to understand trading better, come on into the Whop group. Doesn't cost a penny. So we could have got out right down here, okay? 30,305 down to 30,281. That's almost 20, it's 25 points. That's $500 on one contract. Or you could have got out right there. The diamond formed about there, I think, but you would have got out before that because the oscillator went into the neutral zone right here on this bar. So you would have either got out early on this bar, you could have tried to get out down here, right? If you wanted, and you could have got out over here. But you could have been fine getting out over here. There's nothing wrong with that. Don't worry if you get out a little bit early. It's okay. There's always the next trade to take. Here's another nice trade right here. This, however, probably would have stopped. I recommend, if possible, try to keep your stops above the signal bar. Just see what happened here. You wouldn't have got stopped out. Came all the way up to the signal bar, but didn't go up above it. So I really recommend trying to keep your stop loss above the signal bar because your entrance would have been right about over here below the signal bar. So that's quite a ways. If you're not comfortable with that type of stop loss, don't take the trade. Just don't take the trade. Okay? If you did, you could have stayed in it. Look how fast this moved down, trying to recapture this liquidity. Would have got out way down over here. This is how the market moves. As you start to understand how the market moves, you'll feel much more confidence in taking these trades, and you'll be able to stay in much, much longer. Okay, we'll move back one more day, and then we'll end our video. Let's see here is a long. We got a lot of trades with this system. It's a nice long trade. Would have been exited way up here. Nice clean move. All this we caught. So we were looking for that type of move. We didn't trade here, but we got a nice trade here at 10 o'clock in the morning Pacific time. I think we went over these trades already. Got it over here. So yeah, we covered these trades and we made money on a day like this. This is all choppy. Look at that. But you need a order flow confluence indicator like this coupled with our oscillator. These two together will give you tremendous it will give you an edge in trading. You'll be ahead of anyone else. You'll truly have an edge in trading, and you'll see that. You'll really be able to take trades with confidence, and you'll see how You can get into these trades very quickly while everyone else is waiting. Look at that. You're at the bottom here. So this is a very, very powerful system. I'm trying to make you aware of what you have here and why you want to be involved in this type of a system. There's no other indicator that I know that can give us tops and bottoms like this order flow system, an indicator. And when you couple it with our oscillator timing system on the bottom, this tells us if the market's going to turn. Okay, also gives us an exit. You want this. So here's a beautiful trade right here. This is actually after hours. This is our entrance. This is our exit. Made money. Here again, another trade. Entrance up here. But then we're getting very close to the exit. So you might not want to take that trade. I'm kind of moving a little quickly here. Here's an entrance. Look at that. It's matching our oscillator. Comes straight down. Had a nice move. This is in the Asia session, right? This is 15:15, so the market just opened about 15 minutes ago on Globex. Maybe you like to trade the Globex market. And here is the New York session. This is actually let's see. This is a shortened day. This must have been Monday. This was a shortened day, holiday, closed after 10 o'clock in the morning. So let's move a little further back. It's kind of fun to show you these trades. I'm going to have to use our replay because sometimes the order flow indicators require a little closeness to where we're trading. We're showing the replay. Okay, so here would be our first trade of the day. We got a good long occurring right here. Perfect trade, moved up, but there was no exit. So we had to exit down here because there was no way of getting out. Didn't move up to capture liquidity, no exit down here in the oscillator. This happens, we have to exit, take a stop loss and exit that trade. But look what happened. Just a few bars later, we got another diamond forming on our oscillator. We're back in the trade. It recaptured all the liquidity and more. So this trade here was 29,535. And look how long we were able to stay in this trade way up here. So this trade here was close to 100 points. Okay, so you have to be willing to take a trade like this, exit the trade on a stop loss because there was no way of staying in. The market came down very heavy, very quickly. It was testing 29,500. So the market came down, caught us, gave us a good entrance over here, and blew way past here. So if you're going to trade, you have to understand trading. You have to get a feeling for how these systems work, how the market works. You have to have confidence in a system like this that we are capturing the best possible entries. Here's an entrance here. We did fill the liquidity gap, but there was no good exit. You might have got stopped out. That's okay. Here is another entrance. Don't worry. Take the trade. Diamond formed. We got out, made a couple of dollars. I'm happy. Here's an entrance for a short. Came straight down. Diamond got us out. We took this trade. We're done. Here's a nice entrance. Again, on our oscillator, it's confirmed. Why getting right about over here? This bar is closing above here. All the confidence in the world. Move straight up. Look at that. Look at that. Wow. We caught a beauty way up here. And we exited on this bar here. This day here, we made over 100 points. There's over 100 points on a day like today. Another entrance here. Oscillators confirmed. This oscillator is a special custom oscillator. It's meant to capture turns in the market very well. So we caught this turn here. Oscillator confirmed the order flow, got it on this bar, exited on the circle. Right there, And look at that. We now have an entrance short right there. Entrance right here, took it straight down, nothing stopping, no stop loss, came down hard, entered, exited right here. Wow, look at that trade. That's a 50-point trade. This was a huge trading day for us. Okay, and it's not a great trending day, but we made a great day out of it. That's a Friday, by the way, right here. So in the description, you come into our Whop group, no cost, free membership. Talk with us, talk with the group, get a feeling for how this system works. And when you're ready, try it out. You got a 3-day trial. You can back test it. You can talk to me. You can live test it, forward test it, and see if this is not the best system that you've ever traded day trading. Okay. So thanks for listening, and we'll see you in the Whop group.